Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 UAE time on the 30th of October, the second last trading day of the quarter, and we have Brent crude oil essentially little change, down 0.5% on trade in Asia this morning. The Nothing really much impacting the markets from the news out of South Korea, where President Trump and the Chinese leader just held their first meeting since Trump returned to office in January. Obviously, a lot of expectations around that meeting to resolve the sort of obvious face-off that has been between the two, China and the US trade war over much of the year. Let's go straight to Norway, to Jamal Qureshi, Managing Director, Analysis and Strategy at Petrologistics. There was a lot of expectation in this meeting meeting between the two leaders. Has it met that expectation? The market seems relatively uninterested with the results.
I think it's still a little bit too early to say. There's been some talk increasingly of the notion that Trump's China hawkishness might be easing off structurally. Certainly the back and forth we've had over especially rare earths and things like that would seem to be a reason to have brought these talks as far as they are, along with the fact that China is showing, they have the, real leverage in the discussion. Well, in global trade in general. So this seems to be a case, one round of trying to say, all right, is Washington going to say we need a modus vivendi here, and is Trump really going to be grabbing onto that possibility? As usual with him, it's hard to tell. At this point, it's only Thursday, so we'll have to see.
Well, I suppose there are worse outcomes that could have happened in the sense that in terms of where we saw, I don't know, was it how long ago? Time is squidgy, but there was a moment in Geneva over the last year where everybody walked away, and it seemed a bit of a shock that they couldn't find some alignment. But Gemma Parker, senior analyst for global oil at FGE and Nexant ECA in London, all the way over there in the dark in London. Gemma, are you still in the dark from the results of this meeting? Should we expect more to drip out?
I think, as Jamal said, it's only Thursday. We'll see. I think what everyone's a little bit wary about overreacting to any headlines that are especially Trump related at the moment, as we saw from the initial announcements back earlier this year. Was it February? I think the market, first of all, took them extremely seriously, and everyone was expecting demand to be really seriously hit. Demand's been very resilient so far this year. So in a way, we haven't really seen as big an impact as everyone expected anyway. And so now we should see even less of an impact. So I think
maybe I'll just challenge you on that thesis. I mean, ultimately, when the rare earth blockade was announced in early October, oil prices fell quite dramatically, quite quickly, from 65 comfort zone to nearly knocking through 60. They have
Indeed
recovered on the expectation that this meeting today would actually occur. So it occurred in that sense, protecting $65 oil. No, I mean, that's not insignificant.
No, I would say the reason that oil prices didn't remain that low is because demand has been resilient. So, of course, initially everyone was expecting the very high impact of tariffs, but we haven't really seen the impact on demand. If you look at the shipping volumes, how much trade's actually been moving, actual demand indicators, it's not been as negative as people expected. So I think to some extent, yes, it's dependent on a headline from today, but I would say that the market responds more to fundamentals than to headlines at the moment.
Well, fundamentals and headlines is what they like to deal with in Singapore. Xavier Tang, a market analyst at Vortexa, sitting a little closer out there in Asia. How do you feel in the immediate sort of gut check after this meeting in South Korea between the Chinese and American leaders?
No, I think that we need to know that Trump has come up with such tariffs for multiple instances to many countries, and then he first raised the tariffs and pulled back the tariffs. He did it to many different countries. Now, what I would say to this meeting, it's kind of like expected because the market doesn't expect Trump to go head on with China. A lot of people expect that the tariffs will eventually come down in some form of or another. Now, in terms of the impact on the oil markets, there hasn't been huge changes in terms of oil prices. Ultimately, it really depends on how much economic impact it has to China. And as what we can see, there is some form of negotiations between China as well as the US. And some of the trade flows will kind of resume for things like soybean purchases or even rare earths.
When we started earlier in the new year, or in the year, Jamal, when we had the announcement of the tariffs of this Liberation Day in early April, we were sort of trading at more elevated levels. The oil price was coming through the first quarter close in the 70s, sort of moving between 70 and 75. And then, of course, since the trade war began in early April, or first announced, and then we've been off and on and off and on. And I don't know if this event now, an hour later, are we off and on? I bought some soybeans. You reduced my tariffs by 5 cents. Is this still a trade war? It seems to me that this is a 10-year, 20-year trade face-off of sorts. But in this year that we're in, we were in a clearly more elevated price bracket before this Liberation Day tariff war that Trump has taken to the world, with China sort of first to the queue for the American punch. Does anything change here in this? Do we get back to that 70 rather than 60 to 65 with this sort of beginning, or some element of a resolution between China and the US?
Well, I mean, first of all, I don't think this is a resolution. This is just another piece of the round. I wouldn't even call it thus far anything I think anybody could say is clearly decisive by any means. So in that sense, I don't think it's possible to say that this represents any kind of turning point. Or at least
the fact they met is a turning point of sorts. They hadn't met before in Trump 2.0. The signal, I mean, this could be a lot worse, right?
Yeah, I mean, he met with Kim Jong-un the first time through, and North Korea and the US still have issues. So it's simply the case that we haven't seen something, I think, that we can look at and say this is a final resolution of the key and core issues, to the point where the market can structurally look and say, not only is this a structure we can go forward with, but clearly Trump is committed to it. We don't have any clarity on any of that. So until that becomes truly clear, I don't think you can say that the Trump and tariff and trade war aspect of things is going to structurally change the perceptions of the market. There has to be greater clarity there.
Gemma, looking at the more fundamentals here, I mean, the idea that the two biggest world economies in the world are having such a struggle, and with it disrupting the trade element and tariffs in all sorts of directions, in Europe as well, where you're sitting. But the fundamentals of supply and demand, all things being equal, we are moving into a window of time where most forecasts are for a supply surplus that doesn't ever seem to arrive at a scale that expectations were throughout the year, that would suppress prices below that sort of solid $65 handle where we've been stuck for some time. Is the fundamentals finally signaling that this supply surplus will come now, coming weeks?
Absolutely. It had been, I would say, until September. So we expected it to show in September, and that is indeed when when you could see the surplus arriving. Because, of course, in the peak summer period, a lot of the additional OPEC supply was being absorbed domestically. It wasn't necessarily leaving the Middle East. What we could see is product inventories. Of course, crude is one thing, but product is what's essentially consumed. And what we've really seen is middle distillates in particular have grown massively. So for example, you normally have a build of about 8 million barrels a day. We had more like 30 million barrels a day. In terms of crude as well, you could really see it coming out on the water and ending up in the tanks. But of course, now what we've got on the fundamental side, I would say that the Russia issue is so much more important than any US-China news. So of course, all the volume at risk there. We're always asked what are the solvers, by our clients. So when we're saying there's going to be this, the indications are for a big surplus of about 2 million barrels a day. And now we've got, I would say the market's probably pricing in about 1 million barrels a day of lost Russian supplies. So that is now absorbing some of the surplus. So there was definitely signs that we had too much, and the recent sanctions on Rosneft and Lukoil have, of course, now taken us back a step, bringing things more into balance, I would say.
Xavier, looking at that sort of fundamental posture at the moment, of course, China underpins is still, despite its sort of weaker demand outlook from an oil point of view compared to the great old days, but ultimately still a major pillar in the global oil markets, importing 11 million barrels, give or take, every day through this year. A lot going into storage through much of the year. What's the outlook for China imports?
Okay, as for China imports, we actually expect China's stock building to slow down in the fourth quarter of the year, compared to March to, let's say, August period, where we saw like massive stock builds in terms of inventories. There is also a few concerns on the Chinese players. First of all, access to Russian crude. The state-owned refiners have came up to mention that they are not going to import Russian crude, and that would definitely limit the amount of crude imports they can take in for the coming months. Now, so for the Chinese refiners, there were also sanctions on the ports, terminals, as well as refineries, which kind of disrupts their imports going forward. From a sanction perspective, the Yulong refinery has been sanctioned recently, and so that would be kind of disruptive for China imports, definitely.
Looking, Jamal, at some of the points mentioned there by Gemma, with these fundamental issues, the China-US trade face-off, its disruption to global economic growth and flows, still to perhaps play out. But what we're seeing in a very tangible way in the conflict now between Russia and Ukraine, it seems that once upon a time where energy infrastructure was completely off the target list, it now seems to be front and center on the top of the list. Your thoughts on the impact that is happening, could have, as we go forward never mind stop buying Russian oil, the ability of the Russian production may be challenged by the more fundamentals of bombings from drones.
Yeah. Well, this is kind of the one card that the Ukrainians have to play for leverage. On the battle line, things are static to losing for them on the front lines on the ground. So that's a difficult position they're in. But they built up this large domestic drone industry, long range drone industry, and they've shown they can use it. So when the time comes to come to the table, they need some form of leverage, and that's where they seem to have found it. And we've been seeing that there was a pause in the drone attacks on the refineries in particular for quite a while. We've seen that pick up. We've seen that they more than likely have the capacity to keep it up and even increase it. So really, it's about building that leverage. So that's the impact on sort of the Russian refineries in particular, and then here and there other pieces.
Could this result in more crude flowing out of Russia if indeed their ability to process refine into products that could actually see more crude flow out?
Yes. And, we do see that in short-term dynamics. And if this becomes more structural, we will see that there. Obviously, there's going to be a limit potentially to some of the port infrastructure, but we're really not there. So we definitely could see that at the margins, but then that's at the end of the day, that moves margins more than necessarily the overall balances.
Gemma, the other big story before Trump went to Asia, of course, was the stop buying Russian oil demands and the sort of associated tariff threats, particularly for India. Where is that at? Is that sort of another Trump moment that comes with barky headlines and passes to the next noisy day? Where are we at with stop buying Russian oil, please?
I think it's a really good question, and I would say that is the most significant impact on fundamentals that Trump has had, I would say, since he's actually come of Trump 2.0, as you said, because this one actually means something. A lot of it previously, I would say, is just kind of noise.
Well, it means something as there's implementation. I mean, the Iranian sanctions once upon a time meant something, but if you don't slap anybody on the wrist, then they don't mean anything. I mean, we're on 19 rounds of sanctions since the Russian war invasion of
EU,
Ukraine.
Yeah. So that's the EU side. Yeah. So on the US side, the fact that he's sanctioned, OFAC has sanctioned both Rosneft and Lukoil. I mean, that's 2.7 million barrels a day that those two companies export, plus about 900 kbd of product. In reality, I guess a lot of this will be rerouted via intermediary. So the key thing to watch, as you say, how will it be implemented? How far along the supply chain are they going to check? If it does one STS or one reload, or goes via one intermediary, that might get scrutiny. If you go through two, is that okay? A really key question, I think, is what Reliance chooses to do. They've kind of obviously will comply with sanctions, but they are, of course, the single, I would say, the most important buyer in terms of the market dynamics. They've got two refineries that are partly interlinked, and how the OFAC sanctions are. That they have to make sure that they can have security of supply for crude. They've not said they will stop buying Russian, and of course,
Xavier, I'm already dizzy. with and I'm not even having to track sanctions. No matter how many people you put in a governance department, or you boost up your risk. Is there belief? The markets doesn't seem to believe that this time we're serious statement with Donald is any different than the whatever 10 other times that people were told to stop buying sanctioned G7 oil that the UN doesn't recognize as sanctions.
Yeah, I think we need to also understand the different types of sanctions, because so previously at least at the start of the year, we saw the sanctions being applied to vessels, which is different from the sanctions being applied to companies. So the sanctions that are being applied to vessels, in some sense, the operators, the countries, they can try to find alternative ways to supply the crude oil as well as the products. So they find non-sanctioned vessels to deliver into the ports, or they find vessels to conduct STS with the sanctioned vessels before delivering into the port. And that kind of circumvents those sanctions. Now, right now, it's a completely different scenario whereby they are sanctioning the companies directly. We have not seen this happen. And this is the first time that it kind of happened to an extremely large company in Russia. There's a lot of supplies that Rosneft as well as Lukoil supplies into the market. And we see a different approach from China as well as in India. So the state refiners have came out to say that they're going to in China, they are going to somehow stop importing some of these Russian barrels. And in India, some of them are kind of finding alternative sources to replace the barrels, which means that there could be some more imports before the winding down of the sanctions. So we still have probably about 3 more weeks before these sanctions really kick in. So we could potentially see some of these Russian barrels continue flowing until 21st of November. And then what we can see is perhaps a shift towards the Middle Eastern grades or Latin American grades for some of these Indian state-run refiners.
Let's go to the survey question, looking a little bit at this earlier point, the Trump slashes fentanyl tariffs to 10%. China agrees to buy U.S. or ordered to buy U.S. soybeans. Does this meet expectations outcome from the summit? Slashing fentanyl tariffs to 10%, China buying soybeans. Does this represent a meets expectations outcome from the summit? Yes or no? Jamal, looking at the sort of continuation of the challenge where you could see the geopolitical risk, most notably in the oil markets, being in your neck of the woods, the most tangible outcome or reaction, it seems, in recent weeks. Again, it kind of faded, and I wanted to get your thoughts on how serious it is. Drones being launched from ships moving through the Baltics, sort of threatening air traffic in and around the Scandinavian region. It seems to have gone off the headlines again, but how significant is that being perceived in your neck of the woods?
I think it just feeds into the general perception of, the need for, I mean, we can talk Scandinavia specifically, but
Yep.
obviously Western Europe and Central Europe in general, just the sense for the need to kind of beef up European defense. That's been a structural shift that's happened. And if at times there have been folks in the US in particular who might have felt like, that's a war over there and the Europeans can take care of it. I think it just feeds that European sense of needing to build up the indigenous capacity, which never has really gone away. Washington's interest may go up and down, but certainly in Europe it hasn't. They're having their issues with building up defense capacity for the long run, but the trend is clear, and this just feeds it.
And in that, a more sort of, that's kind of like when our grandkids are in your job. But in next week, where are we at with regards to the consequence of escalation here, in which the Russians are prodding? We have the headline buried beneath 10% fentanyl is Trump ordering the US military to test nuclear weapons because the Russians announced overnight that they tested some underwater drone nuclear capability. Does this all represent, is this escalation? We're sleepwalking, we're the frog in the pot here. The drones over Denmark airport, now we're testing nuclear weapons underwater. We all seem a little bit nonchalant.
I mean, look, again, I put it all into the context of a trend. I don't think there's any particular headline here that says suddenly we're at some kind of tipping point, but everything just feeds onto this, right? In the 19th century, late 19th century, everybody sort of early 20th century, we kind of forgot war and it started to feel really cool and glorious again. And that's certainly the trend that we have to worry about here. I've said for a long time here, I worry my kids and grandkids are going to see a world of war it was my grandparents who last saw. And we're sleepwalking into that stuff. But is there something that's happening this week, this month that tips that? No.
Yeah, Jim, it doesn't seem the oil markets see that. We had the Fed meet overnight. The Fed doesn't seem to be too perturbed. 25 basis point cut as expected, all pretty sober. Anything on the monetary side, the macro side, you think the markets could pay any attention to? Again, uninterested, signaling that perhaps the built-in expectation that another cut in December was guaranteed, that now maybe is under question in a way that yesterday it seemed to be certain.
I think it's tricky on the macro front, especially with the US government shutdown right now. You don't have all the statistics that are being published. So the non-farm payroll, for example, data is not there. There's talk about other statistics being produced instead. I think, again, looking at it from with the oil lens on, you think the prices of gasoline this year were significantly lower than in previous years, but demand didn't increase. So you've got the impact of electric vehicles and so on. So it's very difficult to make those links between the economic, the macroeconomic, and actually what's happening on the ground in terms of oil demand.
One of the comments amongst 1,000 that Trump made over the last few days in Asia was that he expects to see $2 gasoline in the US in the coming weeks.
Yes, I think if he does that and sanctions Rosneft and Lukoil at the same time, that might be difficult to necessarily see, but $2 might be a bit
There's been
extreme.
a lot of, I suppose there's been a lot of surprises in that respect that one would see, we have seen the price of the pump has been declining. I mean, ultimately, OPEC Plus continues to increase supply every month. Whatever's happening with Rosneft or not, which I think is still a fictional idea, it's more a headline than an outcome. What is an outcome is that OPEC Plus is actually increasing supply here.
Yeah, so you've got an extra 137 KBD from OPEC, but potentially a million barrels a day loss from Russia. So I would argue that is more potential.
The market seems to be focused on the little bit more coming from OPEC Plus, Xavier, because they do meet on Sunday, and there's other headlines coming that OPEC may do what they did in the second quarter, was start with some drip, small increases, and then go with the bullish one of 3 months, 3 months worth in 1 month. That's the reporting from Reuters. If indeed they do proceed with that on Sunday, will there be a market sort of similar nonchalant reaction as we're seeing today, or would that shake the markets up, do you think?
No, I think we really have to see how much supplies that are really coming into the market. I think since September, there's really a huge amount of seaborne flows or seaborne crude and condensates that we have seen. October is also quite a sizable amount. So the OPEC Plus.
And how does Vortexa define them? Are they en route somewhere, or they're just sort of going around in circles like floating storage?
Now, so there's two parts in this case. So there's a lot of oil that's on water, and you need to identify where the sources are. So whether it's in transit or whether it's in floating storage, we need to separate the sanctioned barrels from the non-sanctioned barrels. And what we actually know is that there's a lot of supplies on water that came from the sanctioned countries, which means that these supplies do not really affect the general Brent prices as much as compared to the mainstream barrels. In that sense, we also need to look at inventories as well. Inventories have not climbed up significantly, which means we could potentially be able to absorb the barrels at least for this month. So yeah, so back to your question on whether the 137 KBD increase would affect the market. I think they would.
No, I'm saying the reporting from Reuters is that they're going to triple that like they did in the second quarter. They started with little drips and then they tripled it. A triple gin and tonic is a little bit more kick than a single. Does a triple look like it would impact the market? Would that be a surprise? Would that be unexpected? Would this market finally wake up and shake off $65 oil and break through 60 on the back of that kind of move?
So if, let's say, the supplies from Russia is curtailed, I think it's quite possible that the OPEC Plus community could potentially increase by 3 times the amount, like we have seen in the middle of this year. That is definitely possible. But in that sense, I think it will then offset some of the loss in supplies that came from Russia. So ultimately, it's a fair game.
Jamal, your last word on that. The idea that OPEC have got a OPEC Plus, I mean, 6-8 months ago when they started this, you would have, particularly when they went to triple months, that prices would not have held. Most forecasting was indicating a much greater consequence. They must feel emboldened to try it again. Your thoughts?
Yeah, I think they've been playing with sort of an optionality of 2 directions they want to head this whole time. Ultimately, right, we're heading into quota renegotiation and baselines that are going to be set for the long haul, right? We've seen technical discussions and more discussion around it. So, if you are the Saudis, basically kind of pushing things to the point where potentially the market weakens and suddenly everybody has to come to the table to have a more honest discussion, that works in their favor. On the other hand, if the market can simply absorb the barrels, hey, great, we'll take it. That's kind of, and they've still got that optionality. They can just push another round of it.
Kevin, a last word with you on that. Is there scope here for I mean, we've had a big headlines all year about the Chinese building up their inventories. Is there room for the sort of OECD to take some of these extra barrels and also put them in inventories. The US SPR is down below historic averages, and global inventories, OECD inventories also below. Is there scope and space here to load up on that?
That's a good question. I think you've got two aspects of it. You've got the strategic stocks, which of course are not dependent on economics, and the SPR has been very, very slowly building in the last recent few months. And then you've got the commercials. So the day before the Russia sanctions were announced, the market had flipped into contango, but that was the first time. It's obviously been quite backwardated. A lot of the requirements for stocks are in products. So gas oil is still massively backwardated, like $30 a ton last time I checked, $4 a barrel. So, a commercial operator is not going to build stocks under those conditions. Obviously, strategic supply, individual importers will want to have security. In terms of they would need to put out more guidance on the government level if it needed to be done on a strategic basis, because the IEA levels are already being met.
I suppose as long as the OPEC Plus have breathing space on the backwardation, they will continue. Whether they'll go bumper 3 months for the price of one on Sunday, that will be an interesting and fairly bullish or bearish in one level, but bullish from their perspective, perhaps, if they're feeling that brave. 2-1 in this room thinks this summit meets expectation outcome. You get cheaper fentanyl. That's good. Everybody's happy. I thought the point there was to have more expensive fentanyl. Anyway, it seems to me that the fact that the meeting happened at all is probably the sort of positive, regardless of what was actually agreed, if indeed they didn't get to sit down and sign in front of the cameras. That would have been, I think, expectations met on some level, that, signing and doing the old fake MOU thing. But apparently that did not happen. Gemma Parker in London at FGE Nexant. This is the last time I'll ever say ECA again. I've told that to Aman Nasri. It's off the cards no longer. FGE Nexant. Thank you so much, Gemma, for joining us. Do come back. Save your tang. Thank you again. And thank you for joining us in Fujairah this year. It was great to have your participation. And Jamal Qureshi, as always, nobody better in the business than Jamal up in Norway. Thank you very much, Petrologistics. Have a good day, everybody. All the best.
Thank you. You too.
Thank you. Bye.